Wall Street is caught up in yet another scandal, and this time, it's a big one. Here are the details. Wall Street banks are in hot water again, this time over billions of dollars in interest payments that may have quietly disappeared from customers' accounts. The U.S. Securities and Exchange Commission, SEC, is digging into some of the biggest names in banking, including Wells Fargo and Morgan Stanley, over accusations that they've been playing a little too loose with customer cash. Allegedly, these banks have been shortchanging their customers to the tune of billions of dollars in interest by sweeping their cash into low-interest accounts while pocketing the difference for themselves. Let's quickly break it down. A lot of people have money just sitting in their accounts, not really doing much. Normally, that money could earn you some interest, but according to the SEC, these banks have been doing the bare minimum, sweeping that idle cash into accounts that barely pay any interest at all. And while the banks are making a killing off the Federal Reserve's short-term interest rates, their customers are getting almost nothing in return. The SEC is looking to find out if these banks have been pushing customers into these low-interest sweep accounts without being upfront about better options. Morgan Stanley has been under the SEC's focus since April, when the regulator first started asking questions. They're in the middle of what's called a sweep investigation, where the SEC looks at how different firms handle the same issue to see if anyone is stepping out of line. Morgan Stanley's recently filed paperwork puts on a show of cooperation, but experts claim they're just trying to avoid being the fall guys. And then, at the center of this mess is Wells Fargo. They're in the midst of multiple lawsuits from customers who feel like they've been led astray and shortchanged. The allegations are that Wells Fargo has been offering incredibly low interest rates, as little as 0.05% for accounts with less than $1 million in, way lower than what a regular savings account would offer. Critics are saying the bank was busy making deals with other banks to keep these rates low, while they pocketed the real profits. It's a serious accusation and could land the bank in a lot of hot water. But Wells Fargo isn't just facing angry customers. The SEC is on their case, too. They've admitted they're in resolution talks with the SEC over this entire issue, essentially trying to negotiate their way out of this mess. And it's not just Wells Fargo and Morgan Stanley under the microscope. Bank of America, LPL Financial, Ameriprise, and a bunch of other big financial players are also facing scrutiny and lawsuits. LPL Financial is dealing with a couple of class action suits accusing them of similar shenanigans with these sweep accounts. The company is, of course, denying any claims and says it will fight the allegations. They insist their cash sweep accounts prioritize security and liquidity over high returns, but people aren't buying it. Customers are fuming, and the lawsuits keep piling up. Bank of America is also getting investigated for similar reasons. The SEC is taking a closer look at how they've been handling uninvested cash that's swept into interest-bearing accounts. If you think this sounds like a pattern, you're not alone. It's all starting to look like a massive game where the banks win and the customers lose. In an interview with the Financial Times, attorney Robert Finkel, who's been chasing these cases, didn't mince words when he said, "You're talking about a big transfer of wealth from customer to brokerage firm. It is in the billions of dollars that we are talking about." But what's next? As the SEC digs deeper, these banks could be facing more than just a slap on the wrist. If the accusations hold water, this could turn into one of the biggest financial scandals in years. The damage to their rep could be huge, especially when customers are already questioning whether they can trust these banks with their money. For now, all eyes are on the SEC and the banks to see just how deep this scandal goes.